Yeah, inflation is crushing retirement accounts. EJ Antoni from Heritage, economist at Heritage, they've actually taken a look at the numbers, and the average 401k plan has grown from 2021 to 2024 by $11,000. However, you adjust for inflation, it represents a $12,000 loss, 9.2%. Think about that for a second. Many have a difficult time with inflation and numbers, and I always advise people to play around. You play around the government's calculator when it comes to inflation. Best way I can explain this, you do this with kids sometimes. You ask a kid, you joke around, which weighs more, a pound of lead or a pound of feathers? Same thing. Pound of lead, pound of feathers, same exact thing. However, the money that you have, the value of it is dropping. Okay, you can't look at the dollar as a terms of measurement, an accurate term of measurement of buying power. You can't, because of inflation and because of these numbers. I was blown away by this. I really was. That poorly, the average 401k balance only $11,000 from 2021 to 2024. Again, adjusted for inflation, represents a $12,000 loss. Digging a little bit deeper into this, I found that, and it's unfortunate, it's obviously not Markowski investment accounts. Way too many people out there are on set it and forget it portfolios, where they set up their 401k, they answered a few questions, and there you go. They've got a certain balance in stocks and way too much in bonds. Obviously, retirement accounts that have significant bond portfolios have gotten destroyed. Again, you're taking a look at the performance of the bond market. It hasn't been this bad. You can almost go back to the 1920s, for crying out loud. That's how bad it's been for the bond market. Many people having way too much in fixed income, and it's performed godforsaken. And again, this bothers me. It really does, because again, it's a problem we have with financial planning here in this country. There's not enough firms, quite honestly, like ours, that are willing to help everyone out. And many of the firms that actually purport to help smaller investors out put people on set it and forget it portfolios and just collect their fees along the way. We've been very clear. I don't give recommendations here on the program, stock recommendations, but we've been very clear when it comes to fixed income. Very, very clear. The fact that, hey, you know what? Everything that we're buying is short end, short-term stuff. And when those rates bounce up, inflate, short-term stuff. That's it. Okay, you're taking a look at lending the U.S. government money. You've got a Federal Reserve that, again, no one knows what they're doing. No one knows what their formula is, what they're paying attention to, that they're making it up as they go along. It's almost like playing roulette. That puts you in a very, very risky situation. Again, this is, to me, it's malpractice, quite frankly. Malpractice for your advisor to overweight your portfolio with bonds was just ridiculous. And again, I'm shocked at the numbers here and how people's portfolios are structured. Now, again, you also have a lot of weak-minded advisors out there, fearful advisors. They just go along with the flow and say, well, okay, you're this old and you want to retire in X amount of years. And they go to their little handy dandy financial advisor playbook and say, if I put this type of asset allocation in there, I'm never going to get myself in any trouble because everyone else is doing it. And that's, again, there's a lot of sheep out there when it comes to financial advisors. They all do the same exact thing. Same exact thing. Now, they might differ a little bit in the bonds that they're buying, but the percentages are the same because they feel safe. And that's why you're getting substandard returns. That's why your portfolios can't keep up. High time you actually work with someone that has somewhat a bit of intelligence that can see through this nonsense. Who in the world is buying? I mean, you got to be out of your mind based upon what has been taking place in this country to allocate assets in that fashion. WatchDog on wallstreet.com.